I've heard bad stuff about this. There must be some bad stuff about this. How do you answer that? Well, there was fire and there was smoke until Reagan in 1988 made this a safe product with a housing FHA housing bill. It was a Wild West. There was all kinds of ripoff deals. I mean, a ton of ripoff deals out there. It was awful. And people getting kicked out of their house, people being forced to be in a position where they had to move in their 80s or had to start making payments because they're upside down or whatever. I want to make these five things very clear. The bank does not get your home. We never go on the deed. If somebody is going on the deed with you and this is a partial sale of the home, those are called shared equity loans. Get your client away from it. It's 99 times out of 100, it's legal, but it's a ripoff. It is not something that your client should do. The bank never takes control of your home unless you don't make your tax payments, and then we have to foreclose. And by the way, if you don't make your tax payments, the county will foreclose. So it doesn't make any difference if you're not making your real estate tax payments. The second, it's a last resort option. I pretty much beat that to death. There is no question that this should be looked at early. In fact, it should be looked at in your clients in your 40s and the 50s as to why are they paying off their house when they don't have to. That's what I realized when I was 43 years old, and I gave more money to my advisor. Why? Because it made more sense for me, not because it was a benefit to him, but his business benefited as well. In fact, when he started talking to all his clients, his business went up by 30% with AUM and target premium because it was better for the clients to put more money into bucket two and less to pay off the house. The third thing is maybe the biggest issue of all. And I'm glad that you've hung on until the end for this, because this is, I've wrote a chapter in my book about my Cinderella book about this, which all of you are welcome to get a copy of the book. Just email Cheryl or I'll have the QR code at the end. And just say, hey, I want to get some more information. But one of the chapters in my book is the fairy godmother. And the fairy godmother is FHA. The fairy godmother, with an insurance program, a government insurance program, guarantees that if the value of your house goes down and the balance goes up and you live until 100 years old and you owe 500,000 and the house is only worth 300,000, the difference is forgiven with no tax consequences whatsoever. Forgiven. You don't have to pay anything. Your heirs don't have to pay anything. You can't get stuck with a bill. Your heirs can't get stuck with a bill. And can you outlive a HECM? No. Well, you can. If you live past 150, it's a problem. We need the money back by the time you turn 150. So on your 149th birthday, you got a year left. A warning there. No, we haven't had that problem to deal with. The last thing is that these things are expensive. Did you know that financial advisors are expensive? Did you know that real estate agents are expensive? Did you know that cars are expensive? It has nothing to do with things being expensive. It's what are you getting for it? I've increased my net worth because I gave up some of my equity. I've got a bigger tax deduction because I gave up some of my equity. My overall net worth is higher because I did a reverse mortgage. I have less equity in bucket three, but I have more cash in bucket two, and I have more cash flow to spend on other things. So when you take a look at these things, they're simply false. It is not true that you're going to lose your house, that you're going to be upside down at the end, and you shouldn't do this except as a loan of last resort, and now the bank owns the house and you don't. All of the things that are said that are repeated over and over simply are not